Well, thanks so much for joining me. I'm Arlen Boulding with you. Let's review where we now stand in our grain markets. It's been one of those down days just about everywhere you look. We're continuing with the double-digit losses in the corn. These quotes provided by bar chart show July corn down 11 3/4. We're at 7.60, and December down 12 3/4 cents now at 7.12 1/2. Soybean trade today just cannot seem to get much underneath it. We have the July contract 22.5 cents lower at 16.70 1/2. November dropping by 16 cents. So they are actually moving that spread by roughly about 6 or 7 cents right now. Now, if we go into the wheat market, of course, we had that news this morning that Russia's thinking about allowing some exports out of Ukraine if they get some concessions and sanctions. And, you know, you have the back and forth thing. I don't know how much credit to give that story. But anyway, wheat is down today. July Chicago wheat down 24.5 at 11.30 1/4. In the Kansas City market, you have the July contract currently down 31 cents as we speak. In the Minneapolis market, you have July wheat there down 30 3/4 at 12.46 1/2. On the cotton, you have July cotton, though, 455 points higher at 146.09. Wow, almost on the high of the day, just 1 point from it. And now 146.11. There's a brand new high as we're looking at it. We have December new crop cotton now gaining 117 points at 124.95. Now, isn't that interesting? Let's bring in Todd Bubba Horwitz of BubbaTrading.com in Chicago. Red everywhere you look on the grain complex, but you have the cotton just surging ahead in a big way today. Any idea what's going on?
Well, Mark, I think look, the first thing is volume is pathetic. It is almost as if the Memorial Day weekend holidays already started. So it's hard to get a real grasp on any to make sense of any of this right now. The general trend is higher in commodities and should go much higher with A, what's going on in the world, and B, what's going on in equities, because that's going to draw new money. So it's not a surprise to see cotton. It is, you know, it's a little bit surprising to see the grains breaking down a little bit, but they're really not. I mean, if you looked at them on longer-term charts, they're really just hitting some support levels, which to me would indicate to be a buyer. The only one that would be somewhat of a concern here is corn, and I'm really not concerned about corn either. I think that you're going to see the buyers are going to pour in. We've gotten a little bit ahead of ourselves, and at the end of the day, there's going to be a huge demand for grains across the globe, and I think that that's going to lift prices much higher. And my takeaway from today is that the volume is so thin and so quiet that it's hard to really grasp what is actually going on here.
So are you looking at this more as a gift if you're wanting to re-own some of the products today, or are you willing to be a little more patient?
Well, I'm willing to be patient, but I wouldn't look at. I wouldn't mind stepping in here if I didn't already have a position. I might buy more now. You know, I think that buying grains on a dip is the way to play them right now. We're in a very strong uptrend overall. And again, when you weigh in, now I'm not a fundamental trader as a rule, but when you weigh in the fundamentals here and the demand cycle that we're going to see, it only makes sense that there's a lot more room to go on the upside. I mean, we've already got shortages, and if Mother Nature doesn't participate in a good way this year, which we're not off to a great start, we could see these prices really jump, and you could see 30 to 40% increases from where we are right now.
Well, on the flip side, the livestock trade has mainly green on the screen today, and so we'll pause right here, and we'll come back and take a look at that after these messages. Don't go anywhere. Now, let's take a look at our livestock trade, and we're going back to Todd Bubba Horwitz of BubbaTrading.com. He's located in Chicago. And Todd, a little bit ago, you alluded to the equity markets and what's going on there. Let's take a look at what the Dow is doing. And at the present moment, we're up 157 points at 32,037. So it's back up above 32,000 by just a little bit. It had been lower on the day, so kind of chopping around here today. U.S. dollar index, so far today, the June futures are 300 points higher. We're at 102.175, so it does have that. And then on the crude oil trade, you have July West Texas crude, 47 higher at 110.24. As far as live cattle go, here you have the August contract. Let's go with that. 25 cents higher at 133 even. Not big gains, but just a little better. On the feeder cattle market, you have the August contract 30 higher at 168.45. And on the lean hogs today, well, they have been taking a break, but they're back higher. July now up $1.75 at 110.80. So signs of life in the hog market here today, Todd.
Well, Marlon, look, I think cattle's got some problems here, which is purely depicted to the oil and is going to be, part of a budget decision for, the average American household to either buy or not, what they're going to with protein, which is why hogs are a little bit stronger. We're getting a little bit of natural bounce here. If you just looked at this as a product and didn't know what it was, you would expect to see a bounce in a market that has been really pretty dramatically sold off for quite a while. So, these bounces are natural, but, if you're a trader or you're looking at it that way, the bounces are actually selling opportunities, the opposite of what's going on in the grain markets. So, I think from a fundamental standpoint, the purchasing of either cattle or hogs is going to be based on where crude oil is and what the average American's budget is to feed their family. And I think that's where we come down into, if crude oil continues to rise, which I expect it to go much higher, I think that we're going to see a little pressure on cattle because, again, people are going to have to make a decision of filling up their tank and feeding their family. They got to do both. So how are they going to do it? So I think you've got some very serious issues in this inflationary cycle that we're in, which will create some issues. And I think the equity market, the bounce today is just another option to sell them. I think they're going dramatically lower. And I think that this is going to be good for the agricultural index in general, over time, because the new money will be looking for places. But overall, I think that, cattle's going to really go, whatever crude does, cattle's going to be the opposite, basically.
Okay. Well, I'm glad you explained that. Thank you, Todd, for the time today. Todd Bubba Horowitz of BubbaTrading.com. He's located in Chicago. That's the latest on our ag markets as now we are approaching the mid-session. Janet, back to you.